Hello and welcome to Fin Business. Today we're in conversation with Kunal Patel, who's a Fintech advisor. So Kunal, welcome on the show. So Kunal, the interesting question that I have is Fintechs are evolved now. Many Fintechs are already evolved and there are many Fintechs which are still in the evolving phase. But when you speak to many Fintechs globally, when you speak and advises them, what is the trend that you see in Fintechs globally which will drive the future? So what are the future trends that Fintechs globally are working on?
I think the trends that I see are fintechs focusing on specific key areas where they feel that their businesses will evolve. In the past, a lot of companies have tended to focus on payments as the payments is enabler for most things.
Right.
The problem is that payments now has become a bit of a commodity. Consumers don't necessarily care how they pay as long as the function works.
Yes.
So monetization and profitability in those areas will be a problem. The way I see it right now, and the focus has always been on lending. Nobody has ever gotten lending done in the right way or put a lot of focus on it up until now. So companies are now focusing on either P2P lending or SME lending because of the profitability that can be made and the market that's out there as well amongst the SME and micro merchants that exist today. So for me, I think a lot of the fintechs are now looking at lending as a key area for this.
Okay. So yes, if you look at India now, the payment market is already overcrowded, and now the other fintechs, or in fact banks, are also focusing on the fintechs which are into lending space. In fact, RBI came with the regulations on peer-to-peer guidelines.
Yes.
How is the potential in lending market going ahead, or will it be also saturated going ahead?
I think at the moment there's definitely potential because the market's untapped, and the process in which an organisation can get a lending onto a lending platform is pretty straightforward, and the process of lending now has now become very streamlined. Whether it will reach saturation, I don't know. It remains to be seen. But I think right now the capitalization element is there for companies to take advantage of. Big organizations can work with the smaller fintech companies to make the process of lending easier. Typically or historically, that process has always been quite challenging, given the amount of paperwork that's required, the time frame at which this process ends. So these fintech companies can provide that level of advantage for these bigger organizations to acquire SMEs and such like.
So do you see the space lending is getting crowded day by day going ahead globally because many fintechs are operating into that space? And how is the lending market globally? I mean, is it like in India? Yes, we understand that there is a huge demand because of the population is huge, but how is it globally?
There is definitely potential. Certainly in APAC, lending from a fintech perspective has always been up there in terms of priority. The market is definitely there. I think the biggest hindrance probably, or the barrier, is understanding who you're lending to and building up a profile on that particular individual or business to understand the risk and the requirements around that. I think that is where a lot of these companies are still trying to figure out best practices in order to provide the lending services that they want to do.
Okay, the major difference between the payment market and the lending market is there is less risk in payment compared to lending.
Yes.
How are they tackling this risk? What is the prevention mechanism they are laying in place to avoid the risk?
So a lot of these organizations are working with larger companies to help build a better risk profile on organizations that they want to lend to.
Right.
That's pretty important on the basis that whenever you take out a loan, there has to be a due diligence done on that particular person or organization. That exists, but the way in which they do it, the streamlining of that process, the requirements to provide very basic information as opposed to reams of documentation, that's the critical piece in all of this. And that's the difference I feel in SME lending on the fintech side being successful. It's that process of onboarding, providing that service.
Okay, so two quick questions. How sustainable the entire lending model is, because one, you have to put a risk mechanism in place, you have to put a recovery mechanism in place, because given a chance, if you lend me, I will not return it back.
Yes.
That's the mentality, and we have huge loans, lying in the Indian banking system and many other countries as well. So that is one quick question. Also, second factor is if you look at India, many fintechs or NBFCs operating in lending space are borrowing money from the banks and lending at a higher cost. Is that model again really sustainable? So my question is on the sustainability in two parts. One is the risk mechanism and second is the business model itself.
So on the risk part, I think as long as organizations have effective due diligence practices and procedures in place, then it's definitely sustainable. Where it breaks down is if that process doesn't work in a very fluid way.
Right.
Fluidity in the sense that it provides the reassurance for the organization lending, and from an acceptance point of view from the SME side, the process isn't long and elongated compared to another service provider. So those two elements need to work in a very fluid way for it to be successful. The question about SMEs going to taking money from or loan from a bank, and then that was the question, I believe. I can't remember.
Yes.
Is that model sustainable? Probably not. I don't think that's a sustainable model on the basis of the numbers. I think that if you're an SME and you're looking for a provider, a lending provider, you'll typically go with someone that can offer a good rate, but also can provide you that service in a much speedier time. And I think from an SME standpoint, and from the SMEs that these lending fintechs have spoken to, that seems to be the key driver in all of this. It's the cost and also the time in which they can take out that service.
So what kind of growth do you expect in lending fintechs going ahead?
I think the growth element will be slow to begin with now, because it's still quite a new thing. There are lending platform providers that exist today right now, and a number of fintechs in India especially are new with their business models right now. I think it'll start off small, but it will grow as there's more awareness. I think there's also an awareness issue amongst the SME community that this is a service that's available to them. So there needs to be kind of more publicity, I think, made in this regard, as opposed to an SME going to a bank, which is the typical sort of mentality and approach that they would take. And I think for future, definitely I do think that there's scope for these lending providers growing in size as well and offering more to their SMEs.
So again, there are many fintechs operating into payment space, and they actually closed on because they could not even break even, forget the profitability. But since many fintechs are getting into the lending space right now, what is the roadmap that you see specifically for the break even? How long do you think that the fintechs will take to break even?
I think it'll take a while for them to break even. This is a new area as such that hasn't garnered the speed in which payments has certainly taken off. And obviously there are nuances between the two, as we've talked about. So I think it'll take time for them to break even and to realize. I think crucially what's happening now on the banking side is that they realize that SME lending is being disrupted by these guys. And more so on the services that they're providing, the eligibility, the risk profiling, the onboarding. What I'm seeing now from the banking community is these guys working together in a joint effort and providing those services to the SME. So the loan itself is underpinned by the bank. The fintech provider is the sort of front-facing element to that SME. So all they see is the fintech, and the loan is underwritten by the bank. So the bank has taken a different role to a certain degree. So you have the bank, you have the fintech player in the middle, and you have your client there that you're lending to. So there are different roles being played out, and that's the level of disruption that I see happening right now at this moment in time.
Okay, so a quick clarification. When you look at Indian market, fintechs cannot lend directly. Either they have to tie up with banks or NBFCs, and they have to collaborate with them, and then they can do it. How is the market globally?
The market globally is pretty much taking a similar vein to a certain degree. Depending
is it that the regulators are skeptical and they don't want fintechs to lend to the borrower?
Well, I think it's more a case of risk, really, and also risks for the and reassurance, I guess, to the SME that that they'd be protected to a certain degree, or there's a reassurance from that perspective. If you were to go to an SME and say to them that this is a fintech guy that can lend you money, they'd probably be skeptical, because in their head, in their mind, all they've known is to go to a bank to take out a loan, not to some other small service provider. So from that perspective, the thinking is very different today.
Let's stop on that note, Kunal. It was wonderful talking to you. Really good insights. Thank you so much for talking to Fin Business.
Thank you very much indeed for the opportunity.